If you've never heard of the concept of credit card stacking, this is going to blow your mind. Now, I'm going to specifically be talking about business credit card stacking, but you can do this with any credit cards. However, this works much better with business credit cards because they don't report to your personal credit at all. So I'm going to show you how most people apply for business credit cards, and then I'm going to explain to you credit card stacking. Most people pops into their head, hey, I'm going to get a business credit card, and they log online, apply, and then they either get denied or they get a very low limit. Once they obtain that card, they may try again to get a second card if they're lucky, but most of the time they're probably going to get denied on that one as well. Now, getting the actual approval from a single bank has to do with your personal credit and your business entity, but as far as getting multiple approvals, the credit card stacking concept is as follows. Credit card stacking has to do with where each bank and lender are pulling from when it comes to pulling your credit from Experian, Equifax, and TransUnion. The reason we call it credit card stacking is because let's say Chase Bank, when you're applying for a business card, pulls from Experian when they pull your credit. We know that other banks are not necessarily going to pull from Experian. They may pull from other bureaus depending on where you're located, and this is the secret sauce. Because let's say Bank of America pulls credit from TransUnion, well, they're going to see your credit report and they're not going to even see what's on your Experian, which is a pull from Chase. By strategically bouncing around to different credit bureaus based on what we know each bank is going to pull from, this is how you stack multiple credit cards on top of each other. And don't worry, if this is complicated for you, I have much more content coming on business credit, so make sure you click the follow button because I want to keep you guys in the loop on learning how to get more business funding for your new business or your existing one. So again, click that follow button and I'll see you guys soon.
Oh no, sounds a little sketch to me. Welcome back, y'all. If you haven't guessed it, we are going to be reacting to business credit card stacking. As always, thank you for your attention. If you like the content, consider subscribing. Drop a comment down below. Let me know what type of videos y'all want me to react to. Anyway, back to this one. As far as reality, in terms of these business credit card applications, just know every time you apply for credit, especially these credit cards, it's a hard hit. Even if it's a business credit card. So for personal credit, we have these three bureaus that he's talking about. That is specifically for personal credit: TransUnion, Equifax, Experian. Business credit, they typically look at DNB, Dun & Bradstreet's report. So the way they approve, typically, I'm not speaking for all business lending, but from my experience, typically how they approve it, he's correct, it's based on your personal credit. And the way these stacking, whatever they're talking about, he's acting as if one bank doesn't see all three credit bureaus once you apply. That's false. They have access to all that. They see all these applications that you're applying for. And what does that mean? That means if you're applying for $10,000, $20,000, whatever the amount, as a creditor, they see it as you are attempting to get this amount of line of credit in terms of funds. And if you continue to do, let's say 3, right? 20,000 a piece. They're not seeing it as 20,000 totality or aggregate of what you're trying to apply for. They're seeing 3 separate applications for 20,000 each, meaning 20, 40, you guessed it. You're applying for $60,000 worth of credit. Why? Did you get approved? Did you get denied? And we'll see all that because the lenders will have access to that report. It's not invisible to them. And too many new accounts, I can tell you from experience, being in underwriting, they're red flags. Why? Again, what is the purpose? Is it strictly for business? What's happening with the business? Why do you need all this line or credit? Is it just to the point where it's expanding so much? Well, if that's the case, then you're using the wrong type of credit facility for the expansion or the exploding business that you're experiencing. A credit card is not going to do it. And stacking these cards so you get a bigger availability of funds, that's the wrong facility for such a big credit amount. You're going to want to look for a line of credit or a possible loan, those type of facilities. Underwriting, we look for stability, not rapid account openings. That's a red flag. So I think he said when business cards don't affect your personal credit, the reality is Utilization may not report, but late payments absolutely do. And inquiries hit your personal report. Alright, let's check out the comments on this one. What is the purpose of credit card stacking? The creator didn't answer. Yes, please help. No answer. Great advice. One reply. Thanks, Glenn. Great advice, but he responds to that one. Credit is dangerous. Be safe and responsible, folks. I always appreciate the lender 4 on Telegram. He is the best plug. I don't know who that is. So how can we find out where each bank pulls the report from? Telegram, another plug. Note, Bank of America definitely posts from Experian. They do in some cases, this is according to the creator, most of the time TU, TransUnion. 70-30-ish, depends on state also. I don't know about all this. How do you know white credit line a bank is going to pull from? I'm assuming white is which, or how do I find out? Go to Captiva, blah. Alright, I'm gonna go to the next video.
And what's the fastest way to run up a bag?
Alright, so boom, the fastest and the easy way to run up the bag is credit card stacking. A lot of people don't know what credit card stacking is. So you find lenders that only pull from one bureau. So basically you go to Justice Federal Credit and they pull Equifax. So you go to Justice, you apply for a credit card. They give you, say they give you a $10,000 credit card, and you got a $10,000 credit card with one inquiry. You go to Navy Federal Credit Union, Navy pull TransUnion, Navy give you $20,000. So now you done made $30,000 off of 2 inquiries. And think about it. I just told you a bank that pulled TransUnion and Equifax. So now whenever you go apply for an Experian bank like Wings Federal Credit Union, they won't see what you just got from Justice and Navy. So basically, when lenders, they like to see 4 or 5 or less inquiries. So boom, now you can go run up 5 banks with Experian, 5 banks with Equifax, 5 banks with TransUnion, running you up $100,000 in funding off of 5 inquiries.
Man, what's
Stop. Really? Is that what y'all think? The reality is lenders share data. They're all in the same industry. They're all there to protect each other as well. We want customers, there's a market share, and each lender bank has their own respective market share, and of course they try to grow it and get more. But at the end of the day, it's a small world in terms of banking and lending. If they suspect one person trying to take advantage of a bank, a lender, guess what? That's going to spread throughout the industry and especially within that region. So the myth of banks don't know what this bank is doing or that bank. No, they all have access to the same credit bureaus. They're not operating or lending blindly and saying, hey, sure, there you go. No, they all have access to the same reports. They see everything. Another myth also is stacking avoids denials. I think it's kind of what he was getting to on the video. When we see too many applications on a bureau, usually 9 times out of 10 it's going to be a decline. Again, what I was talking about earlier, why you're applying for all these, it's already suspicious. Why are you applying for so many lines of credit or so much credit in general? He's talking about this is how real business gets funded. The reality is, legit businesses, they apply for a line of credit, a term loan, or an SBA type of loan. Not 6 cards opened within 30 days. No, that's not how it works. And this is the second video now that I've seen doing this series or episode, but what they don't talk about, this drops your credit, all these applications. And in terms of liability, personal liability for these cards, you are so if you're thinking of doing this for a friend or somebody else or a partner or what have you, at the end of the day, if you sign that dotted line, you are obligated to this debt. I've witnessed it and I've been a part of some of these instances that I'm going to talk about, but when we notice suspicious transactions, we shut down accounts. At the end of the day, it's all in terms of risk mitigation. We want to mitigate as much risk as possible by only lending, well, not only, but by doing our due diligence and lending to worthy credit applicants. And the main thing here is, what is the purpose of this request? Why are you requesting all these? Because credit card is typically for short term. So it's typically used to fund short-term capital needs, with the assumption that within 12 months, you will fully utilize, meaning pay it off within the 12 months. So anything 12 months or less, lenders, banks, they consider it short-term need. Now, If you're thinking of using all these credit cards and trying to get a commercial building, or heck, maybe even a big equipment type of thing, that's more of a long-term need. So you're going to want to look for long-term business credit or business loan, not a line. All right, let's take a look at the comments. Hell, you got to have credit first. LOL. 3 replies. Yes, and have the money to pay it back, of course. That's the easy part. Best way to build your credit fast is spending less than 10% of your credit card. Buy something for all, $1. Wait the whole month till you have to pay that $1. And watch your credit start building fast as heck. Bro, really easy building credit. Have a plan to flip it. Wow. Any tips to get approved for mortgage? I need to know if I should pay my statement balance completely off instead of paying the full balance. Too many funding gurus and funding coaches are saying too much. Now everyone knows, and credit unions are getting stricter. They've already known. They don't just open up business not having experience, not having risk mitigation in place, not having following regulations. So it's heavily regulated in terms of lending and banking. They know. All right, let's check out the next video.
When you say stacking, what do you mean by that?
I know 50 lenders and banks that we can go get a bag from. I leverage all the cool credit unions that I found over time to be able to stack them up. So we have 3 credit bureaus: Experian, TransUnion, Equifax.
Yeah.
The way you have to do it is you have to know which banks pull from which bureau before we go do the stacking method, because we can't fill up one bureau and we'll start getting declined. So you got to know the information of which banks pull from which bureau. So I got to go to one that pulls Experian first, then the one that pulls Equifax, then the one that pulls TransUnion. So now I got 3 separate approvals, but only looks like to the banks, I got 1 inquiry in each bureau. If I get $20,000 in Experian, $20,000 in Equifax, $20,000 in TransUnion, I just accumulate $60,000. So then we stack them up in that way. So now I can go get you probably 9. Now I'll say 3 in each bureau, 9 credit cards, 10 to 20,000 each. We accumulate 50 to 100 plus $1,000 in that manner, all on the business side, so we can leverage it to invest at 0% interest.
That's not how it works, y'all. That is not how it works. They have to look at your income. They got to look at your... It's just the way they're making it seem. Like, oh, yeah, I'm just going to go get $60,000. No, that's not how it works. Hopefully y'all don't fall for this. Do your own due diligence. Do your own research. But I can tell you from experience, that's not how it works. And he was talking about 0% APR. Well, it's not 0% forever. What happens when that ends and you still have an outstanding balance if you use it? That's going to hike up real quick. So your payment, you got to be prepared for it, right? They don't talk about that. And again, they check, I'm going to give you $20,000 or $60,000 in terms of credit line. Can you pay me back? How do I know you're going to pay me back? Number 1, I'm going to check your credit. Number 2, I'm going to check your revenues. I'm going to check your income. Are you actually in business? Are you actually making money? So the lender, the bank, they look at that as cash flow. Usually, lenders, banks are cash flow lenders. The way we determine your cash flow is your revenues or sales coming in minus your liabilities or expenses. Are you making a net income, or are you experiencing a net loss? Well, that's it for this one. I wanted to touch on it. I've been seeing a lot of credit stacking on my For You page, and I thought I'd touch on it. If you want me to touch it or get in a little bit more detail, let me know. I'll try to make a video on that. But as always, thank you for your attention. Remember, make smart moves, not just loud ones. I'll see you on the next one.